Do you want both sizzling growth and expanding income out of your stock portfolio? It is possible. I know because I've been building a real money growth and income portfolio for nearly a year now, and it has been doing spectacularly well. Last month, even as the stock market was repeatedly soaring to new highs, my portfolio actually beat both the Dow Jones Industrial Average and the S&P 500 index. It is filled with some of the biggest names in the investing universe, high-quality stocks that have consistently beaten the market. You're very familiar with most of them, but I also have selected a few lesser-known opportunities for investors to consider. Hi, I'm Mike Nadell, here for the Dividends and Income channel. Before I start talking about this high-quality, high-performing portfolio, I'd like to ask that if you appreciate the content, please click the thumbs up, subscribe to the channel, and ring the bell to get notifications about the videos that we produce. Maybe you've already seen some videos from my Dividends and Income colleagues, Dave Van Knapp and Jason Fieber. If so, you've certainly noticed something we have in common. Between the three of us, we don't have a single hair on the top of our heads. Being beautifully bald is not something that the folks at Dividends and Income require, but our bosses do recognize that those without hair absorb information very easily and therefore are highly intelligent. That's just science, people. Anyhow, I've been writing about investing in stocks for about a decade now. I run two real money portfolios for Dividends and Income, and the one I'm going to discuss today is called the Grand Twins College Fund, the GTCF. I launched the GTCF portfolio about 11 months ago, back in June 2020, as a way to help my son Ben and his wife Sammy eventually pay for college for their twin sons, Logan and Jack, or LoJack, as I affectionately call them. The boys are now 21 months old, and they are all energy. Just look at those grand twins. Ain't they adorable? But here's the deal about this portfolio. Although I personally am using it as a mechanism to save for college, this is a growth and income portfolio filled with extremely high quality blue chip stocks that are worthy of being held by just about any investor, regardless of his or her goals. So that's what this is about, presenting interesting investing candidates and discussing the portfolio building process, whether you're saving for college or saving for a house or saving for retirement, whatever floats your boat. Even if you're saving for a boat. But yes, as the name implies, my goal for the Grand Twins College Fund is to help pay for LoJack's college costs starting in 16 or 17 years, when the price tag on higher education figures to be many times more daunting than it already is. There are hundreds of college cost estimators online, and this is the one from Vanguard. I plugged in a few assumptions, including the current annual cost of a public out-of-state university, as well as annual increases in tuition and room and board of 5%. After hitting the Calculate Results button, it estimates that 4 years of college will cost about $400,000 in 17 years. Now, multiply that times 2 for Logan and Jack, and daunting might not be the right word for what my son and wife face. Obviously, this is only a rough estimate. Colleges range from inexpensive community colleges to outrageously expensive elite private institutions, and everything in between. And thanks to scholarships, grants, and loans, most students don't pay retail. And who knows? Maybe Jack and Logan will be scholarship athletes, or geniuses, or both. Probably both, but I just wanted to show these calculations to underscore how important it is to save early and often for college, or anything else in life that matters. My wife Roberta and I invested $1,200 into the Grand Twins College Fund before the boys' first birthday last August, and we've added about $100 per month since. Counting a few gifts from other family members, around $2,400 had been invested through April 30th. But the information I'm presenting here is relevant whether you can invest $100 like we are, or $10, or $1,000, or $10,000, or more. It's about the concepts, not the amount of dollars. So far, I've bought 16 companies and one exchange-traded fund for the portfolio. And as you can see from the table here, which also appears on our GTCF homepage, I'm a big believer in proven blue-chip brand names. What do we see? Apple, Alphabet, Amazon, Costco, Johnson & Johnson, Lockheed Martin, MasterCard, McDonald's, Microsoft, Pepsi, Texas Instruments, United Health. You've heard of them all, and I'm guessing you use a ton of their products and services. In addition to those well-known names, the portfolio includes a few other interesting growth opportunities. First, there is DraftKings, the gambling site that just went public last year. It has yet to record any earnings, but investors love its potential as more and more states legalize gambling. DraftKings actually has been this portfolio's best performer, beating the market threefold. Then there are three others. Constellation Brands, which owns beer labels like Corona, as well as wine, spirits, and a large stake in a Canadian cannabis company. Zoetis, the global leader in animal healthcare products, one of the fastest growing healthcare industries, and ARK Innovation, an ETF that invests in innovative, disruptive companies such as Tesla, Teladoc, Roku, Square, Zillow, and dozens more. More recently, in April, I added to the positions in Johnson & Johnson, Lockheed Martin, MasterCard, and Texas Instruments. These are 4 of the highest quality companies available on the stock market. Deep moat industry leaders that have significant competitive economic advantages, as illustrated by this table of what I call quality metrics. Of those 4, the defense contractor and weapons maker Lockheed Martin would appear to be the best valued right now, trading at about 15 times this year's projected earnings. Conversely, MasterCard and Texas Instruments look quite expensive, but most analysts remain bullish on them. An investor often has to pay a premium for high quality and performance. Although I do believe valuation can be an important factor, I don't think that investors with a very long-term horizon who make regular, relatively small investments need to be obsessed with valuation, and that is the case with the Grand Twins College Fund. I will be investing in MasterCard, Texas Instruments, and the other GTCF stocks dozens of times each between now and when the boys turn 18. Years from now, I think I will be happy I focused on the fundamentals and quality of the companies rather than whether they were bargains 10 or 15 years before Jack and Logan even needed the money. Now let's talk about income. I am a dividend growth investor at heart, and I value income as a key part of total return. Right now, the GTCF is only generating about $40 in annual dividend income. But a decade or more from now, after years of adding to the stocks, reinvesting their dividends, and getting dividend growth from the companies, I expect the income part of growth and income to be quite material to the performance of this portfolio. And so far, I am thrilled with how the Grand Twins College Fund has performed. 22% total return from its inception in June 2020 to the end of April. And that's the bald truth. Thanks for letting me introduce you to myself and to my Grand Twins College Fund. I'll be back with a new video every month to discuss the stocks I'm buying for the fund. In addition, I will have videos about the other public real money portfolio I manage, the Income Builder portfolio. Again, we sure would appreciate it if you gave us a thumbs up, subscribed, and ring the notification bell so you don't miss out on any new content. Take it easy, everybody. Back at you soon.